Seeking to scale your business to new heights? Then you are at the right place. Malay Damania, business transformation coach, is here to share valuable advice, tips, and teachings on effective business management. Learn from the best to run a thriving business in these volatile environments. And for more interactive learning from Malay, sign up for his webinars happening every Sunday at 11 a.m. IST, where you can dive deeper into business transformation strategies. Registration link given in show notes. And now buckle up for some quick and actionable insights that will revolutionize your approach to business on Business Veda podcast from your host Malay Damania.
Friends, we all dream of wealth, driving exotic cars, living in lavish bungalows, and vacationing at luxurious resorts. While this reality is confined to the ultra rich, the vast majority of wealthy people actually live fairly low key, ordinary lifestyle focused on careful spending, daily saving, and prudent investing with determination. According to researchers, most wealthy people are those who simply lived well below their means, avoided get rich quick schemes, and let the magic of compound interest work its effects over decades. It is this approach of embracing specific money habits, mindsets, and lifestyle choices that allowed them to achieve real financial independence over time. So, what separates the wealthy from the rest when it comes to earning, saving, and building wealth? Let's explore some of the game changing habits and philosophies of prosperous and financially free individuals. The first habit is live well below your means. This may seem obvious, but it's the most violated principle of building long-term wealth. Extravagant spending, acquiring endless possessions, and projecting the image of fake affluence through flashy purchases is the antithesis of how most self-made rich operate. Instead, they embrace the philosophy of living well within their means. The wealthy understand the simple but powerful calculus of spending less than you earn and prudently investing those savings over many decades to compound into an eventual fortune. They prioritize funneling income into appreciating assets like stocks, mutual funds, properties, rather than depreciation ones like cars, designer clothes, etc. As the old saying goes, they have the mentality of looking wealthy, acting wealthy, but seldom spending wealth casually. The second habit is wealth building over instant gratification. In our instantly gratifying society, many succumb to the temptations of acquiring shiny new gadgets and luxuries the moment they earn the means to purchase them. The wealthy avoid that fatal trap, exhibiting an incredible amount of patience, deferred gratification, and modest spending regardless of the income level. They recognize that true wealth and freedom comes not from accumulating expensive possessions, but from building income generating assets over time. This requires decades of disciplined saving, investing, and avoiding impulsive, unnecessary expenses. The third such habit is the power of compounding returns. Understanding the power of exponential growth through compound interest and investment returns is one of the core principles wealthy individuals harness diligently. Even modest but consistent investing into appreciating assets like again the stocks, mutual funds, or real estate over decades lead to mind-blowing growth over time thanks to the compounding maths. The key is inculcating habits geared towards maximize savings rates while invested assets keep growing exponentially through reinvested earnings. Harnessing compounding effects is perhaps the wealthy's greatest secret weapon. The fourth powerful habit is multiple income streams. While income from steady jobs jumpstarts the process of saving and investing, it's inadequate for building wealth on its own. The truly wealthy focus on establishing multiple sources of income streams that grow more passive over time. dividends, capital gains, rental properties, royalties, profit distributions. This diversified approach allows wealth and cash flow from various streams. While still earning active income and keeping expenses modest, Rich diligently nurture income generating assets like stock mutual funds, real estate, and new businesses that can all produce expanding revenue streams. This separates financial independence from the constraints of any single income or salary. The fifth one is hedging against concentrated risk. Those striving for financial freedom do not fall into the traps of having too many eggs into one concentrated basket. While often taking smart risks, they understand that over concentration creates fragility from the impacts of a single event cascading into total ruin, be it a company failing, one real estate market tanking, overexposure to one industry or asset class, etc. So rather than betting everything on a single endeavor or a source of income, smart habits include diversifying investments across asset classes, industries, geographies, and even revenue streams. Great fortunes are built through diversified eggs spread intelligently across numerous baskets.
Have you got your copy of Business Champ yet? If not, go ahead and grab this Amazon bestseller by Malay Damania. It is a complete roadmap to transform your business. Thousands of business owners have already benefited from the book. Get your copy now from the link in show notes.
The sixth one is risk mitigation over get rich quick risk. Speaking of risk, one of the wealthiest habits involves an inherent risk aversion to purely speculative with little control like get rich quick schemes, hot stock tips, risky options trading, or even cryptocurrencies. While there is always a tiny possibility of hitting the jackpot, research shows Rich avoided extreme levels of risk and got rich steadily through calculated and relatively conservative approaches. The wealthy deploy sophisticated risk mitigation techniques like diversification, downside protection, and embracing a high pain tolerance for volatility. They focus on steadily growing their assets over time as opposed to doubling down on high stake gambles. The seventh habit is about managing finances like a business. Treat your personal finances with the same seriousness, rigor, and discipline as your business. Embrace the income statement and balance sheet mentality of maximizing productive assets, minimizing liabilities, and optimizing cash flows. Specifically, the wealthy meticulously track income and expenses diligently, carefully manage cash reserves and liquidity, monitor their net worth growth trajectory, defer and reduce taxes wherever possible, leverage affordable loans strategically, and exhibit fiscal discipline. The eighth such habit is frugal habits and modest indulgence. Rich people generally embrace an intrinsic level of frugality as an inherent part of their identity. They get delighted in finding deals, scoring discounts, negotiating lower fees, tracking expenses diligently, and generally avoiding fancy purchases that provide little real value. The next one is about constant learning and skill enhancement. One habit separating the mediocre from the ultra successful involves a constant learning and skills acquisition. They continually engage in growing their capabilities, perspectives, and mastery related to their core field through reading, training, coaching. They recognize that knowledge compounds and skills ultimately translate into greater income potentials. By adapting to innovations and exploring complementary talents, they boost their value and open new wealth generating opportunities over time. And friends, the last one is about creating value before extracting profits. Fundamentally, massive wealth stems from solving problems and creating value for different stakeholders. The wealthy people understand that once they excel at creating value for others, then those efforts eventually translate into profits. The true secret is realizing that sustainable wealth requires the patience to create value first and generate passive income capital streams rather than aggressively extracting wealth immediately through random tactics like speculation or manipulations. They cultivate their skills and build empires for value creation first and extract dividends later. So, friends, beyond just money habits and techniques, the research on wealthy points to some common psychological traits and mindsets that propel their wealth journeys. Let's look at them very quickly. First one is growth mindset. Always striving to learn, grow, upskill, self improve, and evolve rather than being fixed or stagnant. Second, long term orientation. More driven by achieving enduring, expansive goals over instant gratification. Very future focused. Third, process over results. Understanding that continually fine tuning the right routines and processes rather than results yields compounding over outcomes. Next, extreme ownership. Assuming full accountability without victim mentalities and excuse making. Taking extreme ownership of outcomes. And the last one, obsessive time management. Leveraging productivity habits and guarding time like gold. Respecting compounding impacts of idle time waste. At the end of the day, friends, accomplishing financial independence boils down to the ingrained habits, mindsets, and lifestyle choices over speculatively long timelines. Achieving financial independence is a journey that requires discipline, dedication, and the adoption of sound financial habits. While the path may not always be easy, the rewards of financial freedom are well worth the efforts.
A top-rated podcast, Business Veda, is must listen for every business owner. So share this with someone who will find this podcast useful. Remember to follow the podcast and tune in next week for yet another business lesson from Malay Damania.